Hey guys, I just finished listening to the Q1 2021 Airbnb earnings call, and it was an interesting one. As the recording of this video, the stock is down 1.8% after hours to $133. So the market didn't really like this quarterly earnings report, especially given that the stock price has been getting hammered over the past couple of days, and it did not bounce back after this earnings report. Let's break down the quarterly results. I'm going to go over some of the numbers and then give you my key takeaways that I got from the quarterly results. Here's a summary from the Airbnb Q1 2021 shareholder letter. And at the top here, it says nights and experience booked at 64 million. This is up 13% year over year, but down 21% compared to Q1 2019. Gross booking value is at an all-time high at $10.3 billion, up 52% year over year and up 3% from Q1 2019. Gross booking value per night and experience booked, also known as average daily rate, is at about $160, also all-time high. This is up 35% year over year and up 31% compared to Q1 2019. Revenue came in at 887 million. This is up 5% year over year. This doesn't show what it is from 2019, but it's up about 6% compared to Q1 2019. So what these numbers are showing us is that business is back to pre-pandemic levels, at least from a revenue standpoint, even though nights and experiences booked has been lowered compared to pre-pandemic levels. It basically means that people are traveling less, but when they do travel, they are opting for more expensive rooms and experiences. Net income came in at a loss of $1.17 billion, which is quite high, higher than what I expected, and this is probably why the stock is trading lower after hours. We'll talk about some of the details of that net income loss later. Adjusted EBITDA came in at $59 million, so basically break even. So this is pretty good considering that we're still in the midst of a pandemic and half the world is still in shutdown. That's pretty nice. Adjusted EBITDA is nice, but net income is arguably more important than adjusted EBITDA, which is probably why the market has reacted how it's reacted. Another interesting figure that I see is that bookings over 28 days is at 24% compared to 14% in Q1 2019. So that means about a quarter of all bookings are for longer term bookings over 28 days. That means there's a demand out there for longer term bookings. People want to live in nicely furnished places and stay there for months at a time. Even me, for example, my Airbnb, I have someone staying there for the next 2.5 months. So there's this real demand there that can't be filled by regular landlords and regular rentals, and Airbnb is filling that demand. Going back to their net income loss, like I said, they lost $1.17 billion. So let's look at some of the reasons why that loss was so high. $377 million is related to repaying a loan early. $292 million is related to warrants associated to the loan term. So my understanding of that is that the creditor of that loan used an option to convert their debt into equity. This doesn't affect the cash position of Airbnb, but it does affect the net income. As a non-accountant, I was struggling a little bit trying to wrap my mind around the expenses related to paying off their debt. If you look at their balance sheet, their long-term debt this quarter compared to last quarter is about the same. So if they spent all this money paying off debt, why is the long-term debt still the same? So after doing some digging, what I found out was that what they did is they paid off high interest debt and replaced it with convertible notes. In the beginning of the pandemic, when things were the most uncertain for Airbnb and just for the whole world in general, Airbnb borrowed $2 billion of high interest debt. And then in the first quarter of 2021, they replaced that high interest debt with convertible notes. So what convertible notes are, they are a type of asset that is not really equity and is not really debt. Basically allows the person who buys that note the option to purchase Airbnb stock at a fixed price at a certain time in the future. And if that person that bought that note doesn't exercise that option, then they get their money back. So basically, Airbnb issued 0% convertible notes that are due in 2026. And people who bought that note have the option to convert it at $289. And if they don't convert it, then they get their money back, which is $180. So basically, if the stock price goes above $289, those people will exercise that option and they will get stock. And if the price goes below $289 by 2026, then they will not convert their notes and they'll just get their initial investment back, which was $180. So this is a good thing. By retiring their high interest debt and replacing it with 0% convertible notes, they are potentially saving hundreds of millions of dollars over the next 5 years. Another thing that contributed to their net income loss is a $113 million impairment related to office space in San Francisco. So it looked like they exited a lease, which again also is a good thing. They are downsizing their office capacity, meaning that they'll also probably save a couple $100 million over the lifetime of that lease. So the net income loss makes sense to me now. There isn't anything that really pops out that makes me worried about the net income loss. But the only thing that worries me about the quarterly results is they haven't grown their supply. They haven't grown the number of hosts and their listings. And this is despite having a large marketing campaign called Made Possible by Hosting that was supposed to attract hosts to the platform. They did say that they've seen an increase in supply in non-urban areas, which is good, but their overall supply compared to last quarter is about the same. Airbnb will really need to increase their supply, their number of listings, their number of hosts in order to increase their revenue. So this is very important to the future of Airbnb. We don't really know if that marketing campaign is successful yet because it's still in the early phases. Maybe it takes a while for prospective hosts to be converted into actual hosts. So only time will tell. I'm not going to go over the question and answer part of the earnings call. It was pretty much the same compared to last quarter, same type of questions, same type of answers. I did a breakdown of last quarter's earnings that did include the question and answers. If you want to take a look at it, I'll put a link in the description below, and I'll put a link somewhere over here. Overall, I thought the results were fine. There were some seriously impressive numbers, and there were some numbers that were kind of disappointing. Overall, though, it was pretty good. It was fine. I didn't expect the quarter to be a breakout quarter anyways. Historically, Airbnb makes the most money in Q3. So hopefully this Q3 will coincide with the rest of the economy opening back up and they can have a breakout quarter in Q3. So if you are an investor right now, just stay patient. We don't know how profitable Airbnb can be until the rest of the world opens up for travel. This might not happen for another 6 months to a year. If you are not a shareholder, I think right now is a very good time to buy into Airbnb when there is still a lot of uncertainty of how profitable the company can be. But even though there's a lot of uncertainty right now, I think is a very good time to get in. That's it for this video. Thanks for watching. I will see you in the next video.